Is the currency manipulator label valid, or do you believe it is purely a political move by the Trump administration to increase pressure on China?
I think at this point, it's got to be said it's probably mostly a political manoeuvre. I mean, if we ask the International Monetary Fund, well, they already looked at the report and they deemed that China didn't actually tick enough boxes to be deemed a manipulator at this stage. So certainly ahead of the US election next year, there is a lot of reason why Trump may want to take a very tough stance against China. That said, if we look a little bit more deeply, what we see in China is of course, a country which has seen a lot of pressure economically. We've seen a slowing China this year. We've also seen an economy in China where there's been monetary stimulus. Now, if we go back to our textbooks, that would suggest that you would naturally see a weakening of the exchange rate. So I think there is a big debate here to be said. Has China just not allowed its currency to depreciate? There's really been no devaluation. I mean, that's a debate. I would argue that there is perhaps the grounds for just a depreciation here.
Is it possible China is, Jane, a currency manipulator, but they're manipulating on the other side? They're artificially keeping their currency higher because it appears the market would like to take it lower.
That's exactly the case, and that's been the case for years. I mean, we all know that, of course, the People's Bank of China, it does intervene to create some levels of stability around its base rate. So we do get the intervention from the PBOC every single day. If they were to step away, if China were to allow its currency to be a freely floating exchange rate, which it's not, that currency would be hugely weaker than it is right now. So
Jane,
yes,
where would it be?
They do intervene every day, and they intervene to keep it stronger. Well, you know, we're looking at levels at 7. If they were to step away and allow the capital outflows to come out of that current country, you're looking at, who knows, pin the tail on a donkey, 9, 10, certainly way above the sorts of levels that we are considering today. So 7, yes, a psychologically important level.
Wow.
But this is a country which is supporting its currency right now.
Well, we had Kyle Bass, U.S. hedge fund manager, on yesterday on CNBC, very vocal anti-China critic. He suggested the Chinese currency could fall 30 to 40% if it just completely were out of government hands. Sounds like you agree with that.
I think many currency strategists really would. The pressure would be for capital to flow out of China. You know, I think most currency strategists would agree with that. It's very difficult to know exactly where it would fall. This will be an unprecedented situation, but certainly we would be looking at a very significant move. Because after all, if China could have a freely floating exchange rate right now, it would. That the reason that it manages its currency is because it can't. It cannot allow that to happen. Now, China does not want its currency to fall through the floor. I mean, yes, you know, you can take Trump's argument and say, yeah, that would be great for exports. But actually, there's a lot of companies in China that have dollar-denominated debt. There are reasons that China doesn't want it from inflation as well. They would have a lot of imported inflation too. So it doesn't want that to happen. But certainly there is an argument to be made that a weakening economy perhaps needs a weaker exchange rate. And this is, I think, what we're viewing at this present time.